Welcome to Markets Now. I'm Michelle Ruck along with Vince Boddicker with Farmers Trading Company. We're seeing red on the board in grain and livestock futures in just about everything but feeder cattle futures. And Vince, let's talk about the grains. First off, it looks like we're getting some spillover and some risk off from the outside markets. You've got crude oil down, the dollar up, and we've had CPI and the U.S. retail data news coming in. And is that part of the reason that we're seeing risk off in the outsides, or what's going on?
I think you definitely have to believe that is part of it. The other side is when we look at other things that are happening. We've been focused a lot the last 2 weeks on Argentine weather. Is a little bit better chance of rain there as we look at the 8 to 14 coming into this morning. Not sure that's huge. Still some areas that could expand, but also I think focusing on Brazil, some of those yields coming in northern Brazil plus 80 bushels an acre. I think the average right now is 52.3 or 52.4, which is exceptional and can help us make up some of those losses. And the other part of it, especially in the grain, I think is the lack of a commitment. Traders report everybody believes the funds are extremely long and nobody knows quite where. And maybe you got some individual investors and maybe even some funds that are trying to liquidate short term.
Yeah. And like you said, the South American weather issues, at least in Argentina, may be kind of baked into prices, and especially in soybean meal, because we made new contract highs. And then the last 2 days we've been lower, and now we're back below the $500 mark. So is the high in there?
I think there's a good chance it is. We're oversold. I think all we can do is get the first pullback and the next rally. If we fall short, then we can confirm it. But it probably takes that to make that statement. But I would think with the rally that we've had, it sure could be. It's not like we're not going to have soybean meal. They're going to import from Brazil and Paraguay. It's going to make them a little bit less competitive, but it's not like they're not going to sell anything.
No doubt. The other thing, we've had a pretty good run here. Monday, we took out the January highs in like soybeans, but we got a lot of these charts, corn, wheat, and beans up into resistance areas now here. And so it probably is a little profit taking too, isn't it?
You have to think there's some of that. You got to believe some of the producers say maybe it's time to sell something at least in here, whether it's new crop or row crop. Maybe they're getting more aggressive. Time will tell us on that. But we all need to look at whether it's corn or beans. Is it a worst case scenario that you sell $7 corn and maybe it goes to 8 or better, or you sell $15 beans and they go to 16 or 17, or you don't sell and some unknown thing in the world happens and all of a sudden we're back at 5.50 corn, or you're back at $12 beans?
Yeah. Are you suggesting some new crop sales up at these levels too?
On the beans, anywhere from 13.85 to let's say 14.10, I think being 20 to 30% sold isn't a bad idea. You look at the cost of your inputs, rent is going up, lock in a little profit on some of it, then set back and be, I don't want to call it complacent, but let's see what happens as weather comes into spring, what the acreage report tells us. Right now, especially on the soybean side, you would think with the cost of fertilizer dropping sharply since last fall, you got to think we're going to favor planting corn over beans if somebody's looking at switching.
Yeah. What do you see as some of the geopolitical influences on the market right now as well? Trade tensions have been rising with China. We also see some reluctance here again by Russia talking about maybe not wanting to extend the Black Sea grain initiative. So those are all things working in here too, aren't they?
I think they are. The Russian thing was positive and gave us that big push late last week, early into Monday. It's faltered somewhat. I think Putin likes to, get his attention and do his thing. The other thing we have to remember is when that earthquake came through last week, that did damage one of those ports in Turkey that they do some of those inspections at. I think all of it adds to where it's at. But yes, last week when the U.S. decided to drop troops on the shores of Taiwan, I'm really not sure that was necessary.
Yeah, there's a lot of moving parts there geopolitically for sure, impacting the grain sector. Okay, let's move over to cattle right now. Live cattle a bit lower. We've been consolidating off the contract highs on Monday after we got last week's higher cash trade worked in. So what do you think? We need higher cash to keep this market going, and will we get it this week?
I think you do need higher cash. The board is in line with where we did trade last week, and not that we can't go premium, but we're getting far enough along on that February contract. I don't think you get a lot more buying unless cash goes higher. You have some weather in Southern Plains that could make some difference on gains and those things, but I'm not sure it's anything huge enough that it's going to make a huge impact. But cash is still the key where it's at, and we have to remember we can all be bullish because of tighter numbers, but the consumer is in the end is going to be the one that comes back and says, what can I pay? What am I willing to pay?
Yeah. You also look at cycles and where are we at right now? And do they mean a lot or do they mean as much when you have such tight numbers and getting tighter?
I think I still like them. I think they still work. You just look at them and say, if you're getting ready for a pullback, you probably don't get as big a one as you would have before unless you get some huge surprise. But I think they're always still worth looking at, especially if you're looking at a timing of, do I sell now or do I sell a month from now?
You bet. So what about the hog market? It looked like we had put a little premium in here with the ASF concerns with Hong Kong and some of those cases there. And maybe we've bottomed this cash market. The index seems to be rising. But can you move this market very far when April's now the lead month at such a big premium to the index?
I don't think you do it a lot. The big key is, do the funds want to add some long positions? They were fairly long here 2 months ago, and they've liquidated most of those towards the bottom end of where they're traditionally long. So they have places to do it, but I would think they may look and believe there's a better value someplace else than hogs right now, as you noted, with that premium to the cash.
Here again, we know that the funds had gone short, but we don't know where they're at right now. Maybe they've covered some of those. And do we know when we're going to get a commitment of traders report? Any indications yet?
I've heard nothing, and you always got to be a little suspect when things go that way, especially a couple of weeks in a row. I haven't heard any reasons why, but it's there. You got to believe there's some people getting nervous, especially in the grain side of things.
Yeah. Well, we'll see if we get something here soon. Thanks so much for joining us, Vince Boddicker with Farmers Trading Company, and that's Markets Now.